Global markets head into the new week with geopolitics firmly back at the forefront after the United States launched another wave of strikes against Iranian military targets around the Strait of Hormuz, reinforcing expectations the conflict is entering a more prolonged phase rather than moving towards de escalation. Iran has again declared the Strait of Hormuz closed, while the U.S. insists commercial traffic continues through alternative southern routes, leaving investors to weigh the growing risk of supply disruptions against the absence, so far, of a full scale interruption to global energy flows. Early market pricing reflects that uncertainty, with crude oil extending gains at the start of the week, while U.S. equity futures are modestly lower as investors adopt a more cautious tone. In FX, the U.S. dollar begins the week with a firmer bias as geopolitical uncertainty underpins demand for defensive assets, although the reaction remains relatively measured given markets have repeatedly faced earlier Middle East headlines. U.S. equities ended last week on another constructive note, with the S&P 500 and Nasdaq extending gains as enthusiasm surrounding artificial intelligence remained a key driver of sentiment. That resilience will now be tested by rising geopolitical risks and an important week for macro data. Attention quickly turns back towards the macroeconomic catalyst. Tuesday's US CPI report represents the week's most important scheduled event and will play a critical role in shaping expectations for Federal Reserve policy before Fed Chair Warsh delivers 2 days of congressional testimony. Investors will also monitor U.S. producer prices, retail sales, earnings season, and the Bank of Canada's policy decision later in the week, with the interaction between inflation data and heightened geopolitical uncertainty likely to determine whether the dollar extends its recent strength or whether it risks assets can continue to look through the latest Middle East escalation. That's all for now.